Hi there, and welcome to Plant CEO. In today's episode, I'd like to welcome Anthony Chow, the co-founder of Agronomics. Hey, Anthony, how are you doing?
Very well, thanks. How are you?
Yeah, good, thank you. Glad to have you on the show. And you're in London in your office in Kensington at the moment.
That's correct.
Yeah, very nice. So good start to the year already, January?
Yes, we had a very busy finish last year and nothing has changed. We're straight back into it.
Great. So let's start. If people haven't seen the episode I did with Jim Mellon, where we covered agronomics, it'd be great to tell people what agronomics actually is.
Yeah, sure. So Agronomics is a London-listed investment company focused on the rapidly advancing field of cellular agriculture. What that means is that we're investing in companies with defensible intellectual property that have the potential to create a step change in the efficiency of production of things that have historically been derived from animals. Because of the environmental issues associated with meat, that is a major focus of this industry, but it extends well beyond that into dairy proteins, collagen, egg proteins, but even into materials such as leather and cotton. We're a unique vehicle. There is no other way, public or private, that investors can gain exposure to this relatively new field. We are also the largest investor in the world. And I think the reason that we've had such significant success over the last couple of years is because this represents one of the most significant ESG opportunities of the coming decade. This has implications for the environment, animal welfare, human health, and even has a role to play in the reduction of risk of pandemics into the future.
Yeah, so to touch on the ESG topic there, why are people not realizing that this is, in a way, a huge element of disruption that is happening to the industry, which will create massive opportunities, but also from the sustainability angle that people aren't putting enough investment into this area?
Well, I think it's just been about messaging. There has been a huge focus historically on the fossil fuel industry, but the reality is that animal husbandry as a standalone industry accounts for more greenhouse gas emissions than all forms of transport combined. And really the list of how onerous this is on the natural environment goes on. 50% of all fresh water that humans use goes into animal husbandry. That includes the water that goes to water the crops that are then fed to the animals. And in fact, it's the case today that 70% of all crops that humans grow are not for direct consumption by humans. They get funneled into animals as feed and perpetuate this very inefficient cycle of producing protein, because animals are inherently very inefficient at converting those calories of plant-based material into calories of flesh. You've got a chicken, which has a 9-to-1 calorie conversion ratio, but a cow is more like 25-to-1. So you have this huge loss of calories. And in fact, the reason that the Amazon is being burnt down is not to create grazing land for animals, but is to create land to grow more soybeans and other plant-based inputs to feed those animals. So, I think the awareness around this is increasing quite dramatically. There are a number of investors at the forefront of this that have been backing this field for nearly a decade. Those are the seed investors in the plant-based alternatives, such as Impossible, Beyond and Oatly, etc., that have now, really risen to the forefront of people's minds. But it just takes time, but once the awareness is there, it still is another challenge to change the consumer behavior and get them to consume less meat. It's a really big challenge because meat and other animal proteins are consumed so regularly, they're so accessible, and of course they're quite nutritious in many respects as well.
And just thinking about those companies that are public on the plant-based side, Beyond Meat and Oatly, their valuations have been hit, and as well as their stock prices. Do you think these companies have been overvalued to some degree now? What are your thoughts on the public companies?
Well, look, the plant-based are really not our core focus, but what probably the key comment that I have is I don't think they really had any business trading up at the lofty valuations that they achieved in the first year or so of their public market lives, beyond in excess of 12 billion, I think, Oatly in excess of 13 billion. You cannot get away from the fact that these companies are primarily branding and marketing plays. They have very limited amounts of intellectual property to defend their position. And when you see very large international food conglomerates like Unilever and Kellogg's, et cetera, launching their own plant-based alternative protein brands, I think the competition is going to intensify greatly because they have huge amounts of distribution capacity, much greater than any of the startups, perhaps beyond an impossible and Oatly aside. I think they're in for a rough ride. The reality is that while they have improved dramatically in recent years, the plant-based alternative proteins still only go so far to satisfy either flexitarians or meat eaters. They are not bad products, but they can't convince me that they're genuine substitutes for conventional meat, etc.
Yeah, so we're going to talk about your investment portfolio shortly, but when you're actually looking to invest in these cultured meat or cell-based meat, what's your preference of terminology for that, by the way?
Cultivated meat.
Cultivated, right.
Is what we're going with. That's what the Good Food Institute have gotten behind. There is still some debate over what is the best terminology here. And for sure, Blue Nalu has a strong preference for terminology cell-cultured seafood. It's still to be played for. And actually, while the FDA has completed its research into this area, the USDA called for comment on it late last year, and all of that is still sort of being compiled. So yeah, it's not finalized yet, but I think it would be helpful if the industry could converge on a single terminology.
Yeah. So yeah, if we go with cultivated for the moment, when you're looking at these companies, what do you typically actually look for when you're doing your research phase and then actually finally making an investment into them?
Sure. Well, I mean, that is difficult to bottle because none of the companies are perfect. But naturally, the obvious things are differentiated technology, top quality management teams, defensible intellectual property, both through formal means such as patents, but also know-how and the systems that these companies have in place to produce protein, or that they're working to produce protein in industrial scales. The other thing that we're also really quite focused on is ensuring that the protein categories that we're going after are quite significant. Beef, pork, and chicken represent approximately 25% each, 75% in total of total animal protein consumption. So if you don't have exposure to those categories, then you're missing out on the really big multi-trillion-dollar opportunity. So we now have in our portfolio, we've covered off all of those: beef, pork, chicken, seafood. We have some novel proteins being produced by Solar Foods. We have egg protein being produced by the Every company, and I think the constituents in our portfolio speak to the breadth of disruption that is coming to conventional agriculture. Again, it's not just about meat; it's about seafood. It's about the materials like leather. And even although at a slightly earlier stage, we have companies producing both cocoa and cotton in a bioreactor.
Yeah. And in terms of looking at the technology, how do you tell where the real sort of scientific innovation is compared to the hype that some of these companies are getting?
Again, it's a difficult question to answer so directly. We have been investing in this field since mid-2018. At that point, less than $50 million had gone into the sector globally. So we find ourselves in a privileged position of having spoken to just about every single company of note in this entire field, and all of the advanced companies certainly going pretty deep under the hood and seeing what they're up to. So, on an absolute level, we look at things like cell doubling times, differentiation times of their cells, the time that it takes the stem cells to turn into the final specialized cell type of muscle and fat in the case of meat. But, there is no single thing that causes us to make an investment. It's really an accumulation of knowledge and looking at many, many smaller attributes and metrics of these companies to see, whether or not they have something that is special and unique.
Yeah, I didn't actually think about that. The cell doubling time, that's probably a good metric to go with, isn't it?
Well, this makes a very big difference in terms of the capital efficiency. If it takes you 40 hours for the cells to double or 20, then, your production process, the time that it takes you to produce billions, trillions, quadrillions, even more cells is going to take a lot of time. But it is really important that these companies can rely on literally exponential growth because the number of cells that are going to be required to feed the world is absolutely vast.
Yeah. And to keep on that point, Upside, that used to be called Memphis Meats, they unveiled their production facility, which cost them in the region of $50 million US. They can produce 50,000 pounds with a future capacity of 400,000 pounds of cultivated meat. However, from my estimations, if we just take the US, for example, the consumption there is 82 billion pounds of weight a year. So there's really a big, you could see it as an opportunity, but also a massive challenge to actually build that real capacity. So how do we get more investment into this area?
Well, the reality is that this industry is going to be supply constrained for decades. The Good Food Institute estimate that to meet just 10% of the world's protein requirements using this technology is going to cost around $1.8 trillion in capex. And, we have only just recently tripped over the $1 billion mark in terms of total funding raised by this industry. So, the challenge in front of us is huge, but also is the economic opportunity and the opportunity to make a meaningful dent in all those environmental metrics that we've mentioned earlier: greenhouse gas emissions, water consumption, energy use, etc. In terms of attracting additional investment, I think the writing is on the wall. We are really starting to see major institutional investors come and invest in this field. Perfect Day, the leading dairy precision fermentation company, has recently raised $350 million, with $100 million from Temasek, Singaporean Sovereign Wealth Fund, and $100 million from CPPIB, the Canadian Pension Fund. So there's Middle Eastern sovereign wealth funds starting to invest, EQT Ventures out of Sweden, SoftBank. These large institutional investors are beginning to play, and I think that is very promising for the field as a whole.
Can you give me an update of the progress your portfolio companies are currently having?
Yeah, certainly. So, starting at the more significant positions within our portfolio, we're very excited by Vitro Labs. This is our cell-cultured leather company. Naturally, because you don't eat leather, this is not burdened by regulation in the same way that the other food companies are burdened. But it's, has signed commercial supply agreements with major fashion houses and will be generating revenues by the end of this year with the delivery of their first orders. So that is a really exciting and novel application of cell culture, because the fashion industry is a very significant contributor to greenhouse gas emissions. And it also, you have higher value, higher margin products. I've had this leather in my hands. It looks like leather, it feels like leather, it even smells like leather. So that, again, just a company that we're very excited by.
Just on that one, by the way, are they able to scale? Because I know a lot of the materials companies that are producing these types of materials, they can only do it in like limited runs, and then the luxury houses, for example, that are buying it, and then they're kind of off the market till the next season.
Yes. So look, just as is the case with every single one of these companies in our portfolio, it is not a matter of whether or not these products can be produced using this technology. They absolutely can. All of these companies have product prototypes. The question is, can this be done at scale at a price point that is competitive with conventional production processes? Vitro Labs hopes to be producing something in the order of 1 million square feet of leather within an annual run rate in about 3 years' time. They're certainly not there yet, and their first order is only going to be in the thousands of square feet of leather. But to put things in perspective, some of the largest brands out there, like Gucci, they consume 100 million square feet of leather every year. So even if Vitro Labs is able to scale to 1 million square feet in 3 years' time, they will barely be touching the sides of how much demand there is for their products.
Yeah, we need 100 more companies like them.
Yes, exactly. Or 100 factories from Vitro Labs alone, which is, that's the end game, isn't it? It needs to replace conventional agriculture.
Totally.
Moving on to Formo. This is our German-based precision fermentation company working on dairy proteins. Unlike Perfect Day, which have gone after milk, Formo hopes to be producing cheese, and with their initial focus on mozzarella. The plant-based and nut-based vegan cheeses don't have the desirable characteristics of cheese, that stretchiness when it melts, and that comes down to the proteins, primarily casein. So Formo has been working on that. They recently received very significant funding. In fact, it was the largest Series A ever completed by a European food tech company, 40 million euros in total, led by EQT Ventures. This is a few years behind Perfect Day, but it is very much, in our view, on a trajectory to become a behemoth like Perfect Day. So really exciting there. Meetable, this is our key play into pork, although they're working on other species as well. They closed a pretty significant funding round last year with participation from some very, very sophisticated US-based biotech investors. In addition to those biotech investors, the DSM, the Dutch sort of science-based nutrition company, also invested and entered into a joint development agreement with them. So that is, they're really well placed to take advantage of the resources and expertise that DSM bring to the table. In our view, this is one of the best companies in the entire field. It's pretty well funded. It's all of these companies are going to need more funding, but we're really excited to watch the progress there. Blue Nalu is certainly a highlight within our portfolio. I mean, they're all very exciting companies, but Blue Nalu, we have been in since 2018. We invested in their seed round, their Series A, and also in their pre-Series B convertible. Absolute leader in the field of cellular aquaculture, the production of seafood using this technology, with their initial focus on bluefin tuna. This is, a high-value product, can't really be farmed easily in the way that land-based animals can be, and it just has a stellar scientific team, as well as a top quality CEO and founder in Lou Koophouse.
Yeah, and they recently done a deal with Nomad Foods.
Yeah, they're doing development, collaborations all over the place. They've also shown incredible leadership with the FDA in determining how all cell-cultured products should be viewed by the FDA and assessed. A very transparent process and open discussions with them. Look, I think because of the quirk of regulation, if you will, in US, where seafood is only regulated by the FDA, whereas meat products, beef, pork, poultry, etc., are going to be jointly regulated by the USDA and the FDA. Blue Nalu is front runner in terms of companies that are going to get products approved and on the market in the near term.
And I think last time I spoke to Jim, he was saying that, that you guys missed out on Every, which used to be called Clara Foods, but you've now managed to also invest in them too, right?
Yes, that's correct. Just late last year, we invested $8 million into their Series C. So Every is a precision fermentation company, like Perfect Day, like Formo, but not focused on dairy proteins, focused on albumin, which is the key protein, which is found in egg whites. Their productivity of their organism is already highly efficient. And in the relatively near term, we'll be producing protein that is cost competitive with conventional egg production. They already have products approved for sale using their protein in the US. So a commercial revenue producing opportunity, the later stage opportunity in our portfolio at Series C. Really excited by this one.
Yeah. And what's the cultivated company that is producing cotton that you've invested in?
Oh, that's Gailey. It's a relatively small position within our portfolio, although they're really moving on to really positive things. There's still work to do, just like all of these companies, in terms of the scale up and getting the cells to do exactly what needs to happen, primarily elongation of the cotton cells. But this has huge implications for water consumption. Cotton also uses vast amounts of pesticides in its production. So the ESG attributes of that are slightly different to that of meat and dairy, but still a pretty important.
Yeah, I was thinking about it requires vast amounts of water, doesn't it, to produce cotton, and that's the real saver here if there's efficiencies to be had.
Yes.
Yeah. What would you consider as white spaces in this area for you guys?
Sure. Well, we've been working on a number of these opportunities for some time, looking at the different platform technologies possessed by our companies to see where there are potentially other applications for them. No doubt you've heard Jim Mellon talk about infant formula, but also applications in pet food and other things. So, watch this space. Shouldn't be too much longer before we're able to talk more openly about some of those projects that we've been working on.
Yeah. And you do have already on the pet food side, Bond Pet Food with those, right? So was that kind of the first area that you've invested in?
Yes. So Bond Pet Foods is they're all exciting but exciting pet food company. They've taken a slightly different approach than some of the other cell cultured pet food companies. They're using yeast to produce chicken protein. So matching the nutritional profile of chicken through yeast. And this is definitely an interesting approach that we're very supportive of. They've already launched a plant-based dog treat in order to build profile and brands, but they're making very impressive strides on the R&D for their proper fermentation-based dog treat.
Yeah. All right. Well, yeah, it's fantastic to have you on the show. Yeah, I really hope more investment is coming to this sector and also to agronomics. So yeah, and wish you luck on the new areas that you're looking to disrupt, in a way, animal farming.
Thanks very much. Yeah, it's an exciting time.
Great. So thanks a lot, Anthony. See you again soon.
Cheers.
Cheers. Bye-bye. Bye.